Netflix stock surges to list highs as market cap Acme Disney. Graphic with the aid of Alastair PikeAFP via photographs. Netflix shares are on the right track to shut at an list high Wednesday as Wall Highway ratchets up estimates and cost goals ahead of the company's Aboriginal-division salary announcement afterwards the shut of buying and selling subsequent Tuesday. With the area hunkering bottomward at home in the face of the COVID pandemic, film theaters and other leisure venues closed, and professional and college sports utterly shut down, Abounding are turning to a live video capabilities for enjoyment, and Netflix ticker NFLX is a chief beneficiary of the style. There have been recommendations of strong boom in alive recreation from different avid gamers. Walt Disney Dis has seen an enormous jump in alive subscribers, and Roku this anniversary spoke of Aboriginal quarter streaming hours have been up 49% from a month ago. But in contrast to Disney and Roku, Netflix has no publicity at all to the advertising business, stubbornly afraid to a subscription most effective profits mannequin, despite drive from some analysts in fresh months to offer an ad-supported version of the service. With ad budgets in free fall and many media companies furloughing laborers, chopping salaries, and struggling to preserve monetary stability, Netflix is now reaping the rewards of its bright reduce no-adverts strategy. When Netflix stated effects in January, the company projected Aboriginal quarter earnings of $1 billion, earnings of $0.66 a share, and million web news subscribers. The Street Accord calls for $1 billion and $1 a share. However, a host anywhere close to consensus could be considered with disappointment. Analysts scent a blowout in the making, and in specific predict consumer boom to draft previous assistance. Cardinal research analyst Jeffrey Oladarzak on Wednesday repeated his purchase ranking on the stock and lifted his fee goal to a highway excessive $1 from $1, inching up his earnings per share appraisal for the primary division to $1 a share from $0.66. He sees 8 actor internet news subscribers for the quarter, with complete subscribers advancing the million stage with the aid of the end of. We believe the unlucky COVID situation is cementing Netflix's international direct-to-consumer ascendancy, partly driven by means of the incremental content exercise that is enabled with the aid of their huge and growing to be subscriber unpleasant, Oladarzak writes. Netflix presents consumers an increasingly acute enjoyable entertainment experience on well-nigh any equipment, devoid of advertisements at a comparatively reasonably priced. The higher their subscriber rank grows and their ARPU raises, the greater they could spend on common content, which increases the talent's target market for his or her service and lessens existing subscriber agitate. Stifel's Scott Devitt also repeats his buy rating on the stock. He upped his target to $1 from $1. He thinks the business will record close to actor net subscriber adds within the division. We appearance the existing environment as prone to power incremental utilization and subscriber additions and assist pressure down close-term churn for Netflix as faculty closures and interruptions to each day business endeavor and hobbies force patrons to are seeking alternate options to normal types of leisure and probably speed up the loss of life of secularly challenged industries, he writes. In our view, the present atmosphere might also pull ahead acceptance curves in markets the place Netflix is at the moment underpenetrated, which might outcome in an advantage to Netflix with a duration past the first half. Piper Sandler's Young Kim writes that Google searches for Netflix accept a secular, pointing to advantage upside in each US and overseas subscriber features in the first division. Despite the launch of new Alive capabilities, Netflix continues to catch a significant portion of natural content consumption bucks as that expend migrates to Alive, he writes. Moreover, with coronavirus fears pushing consumers away from commute and out-of-home enjoyment, Netflix is usually a close time period beneficiary of this quickly altered conduct. Kim continues an overweight score and $400 cost target. Cowen's John Blackledge again his outperform ranking on the stock, whereas appropriation his target to $1 from $1. In his latest word, he experiences a new survey of 2 consumers, who were requested which structures they employ greater frequently for viewing video content. Netflix came out on proper with 0.3%, followed by way of basic cable and broadcast networks. YouTube got here in at %, followed through Hulu, Amazon Prime, and top-class cable networks in the distinct digits. Monas Crespi Hearts Brian White today repeated his purchase score on the inventory, even though he leaves his goal fee at $4 now. With people around the world caught in their buildings, Netflix seems not best to be a natural, near time period beneficiary all the way through this crisis, but additionally a protracted time period winner, as new habits are more likely to recall form by those up to now no longer the usage of the service, he writes. Even after this disaster is over, the concept of abiding to a arranged amphitheater to observe a new film release is an experience that almost all Americans are prone to evade for the foreseeable approaching. Netflix shares have been up % at $0.93, in contemporary buying and selling a brand new best high, boosting its market cap to $1 billion, inching previous Disney to develop into probably the most particularly valued authentic play U.S. entertainment organizations. Year up to now, Netflix is up about %, whereas the S&P is down %. Address to Eric J. Savitz at eric.savitz-baronsum